QuantumScape is developing innovative battery technology that could help the growth of electric vehicles worldwide. In this video, I'm going to discuss where I think QuantumScape stock could be 2 years from now in the year 2026. But to answer that question, we've got to look at where QuantumScape has been so that we can see where it's going. So QuantumScape offered investors an update on October 25th. I'm going to go through that latest update, then show you some interesting financial metrics from QuantumScape, look at the electric vehicle industry, and let you know where I think QuantumScape stock could be 2 years from now. So
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
let's get started. So QuantumScape in the fourth quarter of 2022 shipped their first 8.0 prototype cells to prospective customers for testing, with the goal of providing a proof of concept demonstration of a 24-layer anode-free solid-state lithium metal battery cell. In other words, they're trying to come up with a solid-state battery for electric vehicles. That's an improvement from the existing, what they think of as liquid state batteries, right? QuantumScape is trying to offer faster charging, longer range, and more durable batteries. If successful, that could be a huge boost to the EV industry. So while their commercial target remains 800 cycles of 80% energy retention, they're updating that their top performing 8.0 prototype cell in one customer's battery testing lab achieved over 1,000 full cycle equivalents with over 90% discharge energy retention using the customer specified test conditions. So good news from this test, but remember, they're highlighting that it's their top performing cell in one customer testing. So it's not more robust in more customers, in more attempts. It's just one customer, one test that delivered these excellent results. But so far, QuantumScape has hit solid milestones in demonstrating the effectiveness of their new solid-state battery technology. Interestingly, beyond automotive, QuantumScape remains engaged with prospective customers in consumer electronics. In the third quarter, they entered into a technology evaluation agreement with a leading global consumer electronics player. So in other words, they entered into a relationship with a big electronics company. They're going to try and work out some testing arrangements, most likely, to see if there's something there where they can develop that can help electronic providers. Remember, electronics also rely on batteries, and one of the things most consumers complain about electronics is the need to charge it so often. The battery dies so quickly. Every day you've got to charge your battery for your phone. Every day you've got to charge your battery if you've got a watch. And so this would be interesting, although this is not the primary focus for QuantumScape. It's really EVs. But if this can be just an incremental area, that could prove to be useful, and it could prove to be a big value add for QuantumScape in the long term. So as QuantumScape previously reported, in the second quarter, they finished installing the equipment for Raptor, which is their next generation fast separator heat treatment process. Raptor is designed to deliver up to 3 times as much throughput using similar equipment as their last generation process. This is related to their manufacturing ramp up. Remember, after they develop a proven build for their solid state battery, they need to then take that prototype and be able to manufacture it at scale in order to turn this exciting technology into a business. They need to be able to produce these things at massive scale in order to turn this into a business. So they're making progress on that front, and they continue to target deployment of Raptor by the end of the year. By the end of the year, they plan to have this ready for mass production. So that's exciting news. Continuing with that theme of building out the manufacturing capability, QuantumScape made a big hire in Dr. Siva Saram as the president. Dr. Saram served as president of Western Digital, which was a global leader in solid state and magnetic data storage, with tens of millions of units shipped and more than 18 billion in revenue in 2022. So they're bringing on board some talent that has expertise in developing manufacturing, in increasing scale, in operating massive scale technology in manufacturing. So this could bridge that gap to help them turn a innovative technology into an innovative business. So in this update, QuantumScape told investors what they think they're going to achieve financially. So for the full year 2023, they maintained their guidance on cash operating expenses in the range of 225 to 275 million. They're revising lower their capital expenditure guidance to 75 million to 100 million, and approximately one third of the lower forecast is driven by realized savings. That's the big benefit there, is the realized savings. The other two thirds, they're just shifting that, delaying it to next year instead of actually reducing that capex. But that one third is actually realized savings, and so they're going to be able to achieve just as much with that lower spending because that was just achieved through savings and efficiencies. So despite these changes in CapEx, they continue to target low volume B samples in 2024 off their Raptor process and high volume B samples in 2025 off their Cobra process. So that's when you're really going to start to see some higher volume from QuantumScape is in 2025. That's when the company expects to deliver some of these higher volume B samples. During the quarter, the company raised another $300 million from a stock sale. Those shares were sold at around $8 per share. We're going to see the stock price is lower than that now. And they ended the third quarter with over $1.1 billion in liquidity, and they're looking forward for opportunities to optimize their spending and improve their balance sheet. Remember, they have no long-term debt, and they now forecast that their cash will extend into 2026. So the money they have now is going to last them until 2026. So they've got a couple of years to build out, to achieve, to make progress and hit milestones. And if they hit milestones and they improve, which is what happened in the previous quarter, they hit a big milestone and that got the stock price to jump, and they used that higher stock price to make a sale and bring in that $300 million in proceeds from a stock sale. So if they hit milestones, the stock price will inevitably increase to adjust for that better milestone, that more progress that they've made, and then they can sell more stock to capitalize on that higher stock price and bring in more cash and give it more time. Although it will dilute shareholders, still it will help the company in making progress in building out the manufacturing, in turning this idea into a business. Because remember, for now, they don't have any sales just yet. They're a pre-revenue company, but they are in an interesting position. Their focus for 2023 is simple: to turn the corner from a prototype to a product. And their key milestones are all aimed at advancing product development to build a sufficient level of manufacturing maturity to enable the initial production of the QSE5. With just a few months remaining in the year, they're maintaining an aggressive near-term schedule to remain focused on bringing a potentially disruptive first product to market in the near future. So they're hoping they get it out before the end of the year, but that's not for certain. Management is saying in the near future. So that could mean in the next 3 months, could mean in the next 6 months, but hopefully within the next year and a half, hopefully before the end of 2024, they'll have this product out into the market. And they've got some help, right? One of their main partners is Volkswagen, and the EV industry overall is rooting for this technology, is rooting for this development to work, because they've got a problem in terms of the difference between how long it takes to charge your electric vehicle versus how long it takes to fill up gas in your car. That difference is huge. You can fill up gas in your car in 2 or 3 minutes versus the 20 or 30 minutes it could take to fill up your electric vehicle, let alone if you don't have one at home, a charging station at home, finding one, which are less available than gas stations. And so that inconvenience makes people hesitate between switching from traditional gas powered cars to electric vehicles, let alone the cost, Now, for 2023, the expectations are for 14 million sales of electric vehicles. That would represent 35% year on year growth, and new purchases are expected to accelerate in the second half of the year. EVs could account for 18% of total car sales for the full calendar year. And remember, this is going to be with a massive amount of government incentive trying to encourage people to buy electric vehicles. This isn't organic demand for electric vehicles. If there wasn't that much government incentive, imagine how much lower electric vehicle sales would be. Imagine how much lower they would be if the governments worldwide weren't really pushing this initiative, spending hundreds of billions, if not trillions of dollars to help this industry increase and grow faster than it organically would. Because just from the customer perspective, the demand is not that strong. Just from, if you're just looking at organic customer demand, it's not that strong. That's why it needs so much government support to really push this industry, to push the growth of this industry. It would be much slower without that support. Nevertheless, the support is there, mandates are there, and electric vehicle car manufacturers would like to benefit from that and would like to keep this going. And one way they could do that is by having this solid state battery technology that reduces the time to charge, that extends the mileage range, that extends the battery life. It makes it more durable. If they can have a technology that brings that in, I think consumers would be willing to pay for that, even if it costs a little bit more. But imagine if they're able to produce it at a large enough scale where even the cost is lower. And so that would be a huge win for the OEMs. And so they would be willing to support QuantumScape in helping them achieve this technology. I mentioned earlier QuantumScape stock is down since they made that secondary public offering. They sold shares around here at about $8, and now it's down to about $5.30 per share. It used to trade at over $120 per share. I would argue it should never have been that high. Nevertheless, this was when there was an EV frenzy, and any stock related to electric vehicles was absolutely exploding. It was hard to avoid this frenzy of excitement around EV technology, and many investors got caught up in this boom. Hopefully you weren't one of them. Now these prices are more rational, they're more reasonable in terms of the expected revenue and cash flow that's going to come from the business, and not so much to do with the exciting growth opportunity. Yes, the industry is growing, but very few companies in the industry are profitable or generating positive cash flow. There's a lot of money going out to invest in this new technology, and it remains to be seen who the companies are going to be that actually generate profits and cash flow in the industry. However, interestingly, so far in its life, QuantumScape has lost about $2.65 billion, or invested $2.65 billion in developing this technology, in getting itself to the point where it's at today. Compare that to its market cap of $2.57 billion. So its market cap is less than the amount of money the company has lost. And that indicates, now this won't be a absolute condition, but it kind of indicates that the company hasn't added any value. It hasn't really added any value. It's spent $2.65 billion and it's worth $2.57 billion. So it's been about neutral in the way it's gone about taking the capital and investing it in this new technology through research and development and engineering talent and all of that. It hasn't really added any value in addition to what's been put into the company. And that makes it even worse when you think about that they still have 909 million in cash. They've got 909 million in cash. So of this market cap, 909 million is cash. So the value of the company, the market cap, the enterprise value is about 1.6 billion. And so it's less than the money that's gone into the company. That would be like saying the company has taken that money and it hasn't gotten $1 of value for each $1 invested in the company, which I think is unlikely. From what I've seen from QuantumScape, they've made good progress in proving this technology, in the testing of this technology, and I think there's interested parties in QuantumScape's success. So it's an interesting position right now, in that even if QuantumScape itself isn't able to leap this hurdle and become a mass manufacturer of this technology, it could be bought out by one of the OEMs that wants to absorb this and say, all right, we'll take this on and we'll be full owner of this company and we'll develop this technology in-house. Or if it finds it difficult to ramp up manufacturing because of how expensive and how capital intensive it is, it could partner with one or more OEMs to share the cost of the build out and promise them a certain amount of inventory of these solid state batteries at a certain price, which would attract the OEMs to partner with QuantumScape. So it definitely has something of value there. It's difficult to determine what that amount is. That's the difficult thing. That's the risky thing with QuantumScape stock. However, if you were to ask me, where will QuantumScape stock be in 2026? I would say it's going to be higher than the $5.30 right now. Although that prediction of QuantumScape's stock price being higher 3 years from now than it is today comes with a lot of risk. The stock price could be $40 per share in 2026, but it could also be 50 cents per share in 2026. So it's got a wide variation of possible outcomes that could happen over the next few years. But overall, I would say the chances are better that the value is higher over the next 3 years as opposed to lower. But again, take that with a grain of salt because it's a very risky endeavor, to be sure. Before I let you go, if you've gained any value from this video, which you probably have if you've made it this far, please subscribe to the channel. It'll really help me make more videos just like this one. Thank you for watching.